Good Monday morning, everyone. We are on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. And Jim, we're up this morning. We have a trade meeting between the U.S. and China this week. Give us your...
It's with David Malpass. The question is how high in the pecking order is David Malpass. Of course, we all know David. Used to interview him all the time at Cudlow and Cramer. Incredibly smart. I think that the trade talks are making it so that people feel, you know what, we can spend a little time, less time. It shouldn't occupy so much of our head. Witness the fact that Estee Lauder is up so much, and Estee Lauder gave a very downbeat guidance, and the downbeat guidance is related to a 25% possibility of a tariff from China. And I think people are really discounting that and saying, listen, stop worrying about it. I don't feel similarly inclined because I'm constantly worried about China or else I'm not doing my job. But there is a belief that, you know what, we're going to get through this thing. And that's because the Malpass talks are going to start, and people believe that that's going to go well. I think we're always a tweet away from the international companies of getting hurt. We own a bunch of them for action alerts. You should, of course, check your bulletins or subscribe if you're not a club member. But we're up nicely on a lot of them, and we feel pretty good. The only ones we're not doing well on are auto-related, because auto seems to be in a slowdown. Once again, look at NXPI. We sold NXPI at 126. It's now below 90.
You mentioned Estee Lauder, that is real money's stock of the day.
Yes.
This is a company at the center of the whole selfie generation.
Yeah, Fabrizio Freda, who is a true visionary, long ago recognized that because we are now selfie and Instagram, we always have to look our best. Particularly, by the way, that is something that's caught on in Asia, which is the big growth. That's why you could say, well, listen, shouldn't I be careful? Should I pay up 5? What's happened is that the worst did not occur. And I think the worst did not occur in part because there is a secular change in the way that we present ourselves and care about ourselves. And that's everything from Estee Lauder to SodaStream, which is basically club soda. So these are all driven by millennials, and don't forget it, because millennials are no longer some sort of group that's amorphous. It's who's doing the buying. And if you can nail them online, get them online, then you can really, maybe move the needle eventually for your company.
And Jim, I guess you can kind of bring that story to what's going on with Nike. They were upgraded by Susquehanna, price target raised to $93 a share.
Nike is, a lot of that is because of the United States. The growth has been in China, but the United States growth has made it so that people feel much better about the core. Don't forget Foot Locker reports on Friday. I think that the 2 upgrades today, we're trying to get ahead of Foot Locker, saying unbelievable things about Nike. Foot Locker looks like a cheap stock, by the way.
And Jim, we should point out, going on in the background are certain sleeper stocks, as you point out, in real money. You talk about a few of them, Kimberly-Clark.
Yeah, Kimberly-Clark, you're putting high single-digit price increases through. It's obvious they're going to stick. Remember, it was mid-single digit for Procter. So Procter is doing quite well as a stock, even though it only had 1% growth. Kimberly has had terrible numbers, but look how it's doing. And I think a lot of that is if you raise your price, I have this in a real money piece, if you raise your price and then the raw costs come down, a lot of these companies were reacting to oil going to 80, they thought. We're hedging our bets here. We've got some consumer product stocks and we have some oil stocks, but if oil goes down, the gross margins are going to really, really fly. And that's a very positive scenario, and it's why some of the consumer product stocks won't quit. And how we've been wrestling with this for action alerts is kind of interesting, because we've been waiting for a little bit of a cool-off to buy some of the names, and they really haven't cooled.
And if those gross margins went up, that would be quite a reversal from a few months ago when we were all worried about declining gross margins.
Yeah, I think that when you get, the dollar is hurting these companies. The raw costs, whether it be plastic or whether it be oil, if those come down and you've raised prices, it's really going to be a remarkable inflection point. And that's what why people continue to buy Procter. I mentioned Procter only because of Kimberly. Kimberly's raised the prices for exactly the products that Procter sells to high single digits. That leaves either Procter can gain market share by mid-single digits or join Kimberly and do high single digits. And either way, it's just great for Procter.
All right, Jim, what do you have coming up on Mad Money tonight?
I have a company called Aptio. A lot of companies want to be cloud kings. It's a company that does information infrastructure for finance. And I don't know how big the vertical is. I don't know how big the moat is. We have to find out. Obviously, they're partners with VMware, and that partnership looks like it's doing well. VMware being one of our cloud kings. So it's not bad.
All right, that's tonight, 6 p.m. Eastern on CNBC. And Jim, before we go, you had a great weekend in Colorado.
Oh, yeah. My sister-in-law, Ellen, congratulations to her, and Don, both sensational people. Don Blake, They had their wedding. They're from Boulder. She went to she went to Boulder, and what I think people have to recognize is that everyone should go there. By the way, a lot of the tech companies from San Francisco are going there because it's still reasonably priced. The wedding was at a place called Chautauqua. In 1876, there was a movement, 10,000 cities strong, to have places where people would go read and learn. Those are Chautauqua. We managed to stay next to Chautauqua and went through, covered the Flatiron. You can see the rocks that we climbed. Remarkable, and Boulder. Some of the people are so great, and the school's so great. And I don't know. I didn't want to leave. I was just there for a quick hit because of the wedding. But it is remarkable, and Chautauqua is remarkable. And it's really great climbing. My daughter's been out there too, and you can climb and hike. I'm giving you a commercial for it, and it's not just because they've loosened those rules about pot. It's very interesting. We'll talk about Constellation. We're doing a very big conference, by the way, in October, where I just landed Rob Sands to go with Bruce Linton from Canopy. But the idea that you look at the cannabis market now, you see these little company, little mom and pop shops, because you can't take credit cards, and there's all sorts of rules involving states' rights. But if you look at what Canopy's ultimately going to become, you realize it's going to go mainstream. And I think that in the end, everyone from PepsiCo and Coca-Cola to Bud and to Molson are threatened. And I think that's why Rob Sands is such a visionary.
And can't forget Canada is going to legalize that in October as well. All right, Jim, thank you so much. Jim and I are going to continue talking about stocks, including PepsiCo's deal to acquire SodaStream. Please join us on ActionAlertsPlus.com.